Hello and welcome to this live edition of the 1895 podcast. We've got a few in the room here for the benefit of the tape. We are live at Gasworld's European CO2 Summit 2026 back here in Rotterdam, aren't we?
We are indeed, European CO2 Summit even,
Sure
Tom. But it is super, fantastic. Fantastic to start with some beers in front of us as well. Very appropriate, with the molecule that puts the fizz in those beers, of course. And perhaps now we should get into some other introductions.
I think so. So the theme over the next couple of days is going to be driving the value chain, and we're going to get a bit into that over the course of this conversation. But I think before that, for the benefit of the tape, once again, we are joined by two fantastic guests. Sitting by us here is David Hurren, CEO and Director of DAH Renewable Consultancy, and also David Christopherson, of life cycle analyst for future biogas. So I guess instead of me reading chapter and verse about the both of you, I'll let you introduce yourselves. So this could be a bit confusing, but David, you first.
First of all, thank you very much for the invitation. So I've been working at Future Biogas for a while now, and in particular I have been focusing on our life cycle assessment model, which we've built in-house to very accurately and reliably calculate exactly what the carbon intensity of both of our products are. And I say both now because we have an increasing emphasis on CO2 as an important product of our industry. And so leading on from that comes naturally, this is where all of our emissions come from. How can we reduce them? So I also help develop the R&D strategy at Future Biogas. And another side effect of knowing where all of our emissions come from is looking into certification. And particularly going a little off track when it comes to LCA, so looking at things like indirect land use change or other indirect sources of emissions that aren't necessarily accounted for in a lot of frameworks for emissions accounting.
Sure, thanks, David. And David?
Yeah, I guess I've had over 40 years experience in the gases industry now and heading for 30 years experience in the CO2 sector as well, sort of having moved from a more purely industrial gas company. But also I sit in the space between the renewable biogenic space, so I'm on trade associations, do consultancy work around anaerobic digestion, and also still sitting with the trade associations as a safety point of view in terms of industrial gases.
And part of our editorial advisory board,
Absolutely.
of course.
Absolutely, thank you for those introductions, gentlemen. So, David Hurren, I'm going to turn to you for a moment. We've opened with a relative happy hour, but we must remember, of course, it's far from happy hour elsewhere. Far beyond these shores, we have an escalating situation in the Middle East. It seems appropriate to ask you at this point, we see a number of impacts on various markets. Do we see any impact rippling through to, let's say, fertilizers, ammonia, and ultimately CO2?
So certainly in terms of the fertiliser market, there are production points in the Middle East and there's a significant interruption to that and the urea market. So you've seen rising urea prices as part of that trend. I think the challenge you have as well is that you also have natural gas price movements. So the TFT in terms of the European prices are up 50% since the start of the conflict. That's actually down from its peak. That is very different from, say, 21, 22, when we had the Russian invasion of Ukraine, in that it's anticipating short-term impact, but it's not really come through to long-term prices. So you'll see higher 2026 prices, but when you look at the 27, 28 prices, those are not massively up. But the characteristics of the market have changed radically because we've stopped taking Russian gas into Europe. We're now much more dependent on LNG. So we've got a situation where you're dependent on the LNG prices, and Qatar produces 20% of the world's LNG. And it's not just a Straits of Hormuz question for the LNG. Ras Laffan is shut, and you see the same stories because you impact into the helium podcast, and so we've done a helium podcast on that as well. So you're starting to see an impact from that, which right now, March delivered volumes have not gone down on LNG, particularly because they were on the seas. It comes from April, and then it depends on how long that continues as to what that will be and how that market prices that in. So we're seeing those impacts. Historically, we know that higher natural gas prices have tended to cause extended shutdowns on European ammonia fertilizer production, because they import the ammonia and make the fertilizers that way, and the marginal costs become too much for them, even if the urea prices are higher. So we know there's a lot more risk in there. We've seen Yara have made announcements that they are going to have to trim production if there's kind of based on the higher price. But what we're seeing at the moment is more, I'd say, an increased risk profile rather than a absolute, this has actually created an impact right now.
And we've been covering the fact that the whole industrial gases business and the tie-in with the conflict in the Middle East is essentially all down to time and how long this lasts and how much disruption is caused by that length of time. So when we're working to various timelines with the CO2 market, at what point do we need to start to show a bit more concern about it?
Look, I think it's already a sense of concern, and it depends where you are geographically, because underpinning the volume, so you've got still over 40%, I think, on the gasworld numbers of CO2 in Europe coming from ammonia. So ammonia is obviously very critical in terms of where that goes. The other one is bioethanol production. Now, bioethanol impacts are totally regional. We're not seeing an impact because of the increased energy prices right now, but we've seen some structural issues. So you're sitting in the UK, where we've had issues around US imports and the tariffs, and therefore NSUS has been mothballed since September. It's a very different story than you go to France, where the bioethanol market is quite robust still. Into Germany, there's been a certain amount of fragility. So it's a very regionalised picture then in the European market. So some places are much more vulnerable to an interruption to supply. In the case of the UK is still importing 250,000 tonnes of CO2. 60% of that coming from Netherlands, 25% from Norway. So you're sitting in a very dynamic situation, I would say, but the risk is significant, and I think you've got some survey data you can probably share in terms of what the feelings are around that.
Perfect segue there, David. Thank you. I was just about to say we can give some straw poll data from our Gasworld audience. We've been running a question of the day online at gasworld.com. 55% of our audience said last week they would find oil, admittedly, but oil at $150 a barrel extremely disruptive to industrial gas supply chains. In the same scenario of $150 a barrel, what impact on fertilizer or ammonia production? 64% of our respondents said there would be significant cost pressures. I think a further 9% said moderate cost increases. Only 11% said little impact. And then if we look at the CO2 side of things, it's a poll running today, live at gasworld.com. How would it affect CO2 availability? 36% say they expect supply would tighten. A further 32% say some disruption likely.
And we've also got the poll running here at this event. Anyone here in the room can vote on that right now. But the question that's asking is, how confident are you in the stability and reliability of CO2 supply chains in Europe over the next 12 months? So similar to what we've been running online. And currently the results there are 33% saying somewhat concerned with risks remaining, 22% saying they're somewhat confident, another 22% saying that they're very concerned, there's a high risk of disruption, and then 11% saying both very confident and neutral. So would you agree with those current sentiments that we're seeing?
I think the weight of it is showing degrees of concern. I'd say the concern levels have grown, and I think, as I say, it goes back to where you are. Sitting in a UK scenario, I think UK, it's an interesting conversation, because the majors have basically been talking to government departments and telling them, it's fine, we can import, we can manage that, etc. The actual underlying picture is we've got a changing dynamic in the UK market. So NSUS kind of hasn't run since September. So you look at the 25 numbers, actually there was a contribution from bioethanol, and there's a couple of bioethanol plants contributing, but one more majorly. But we've also seen a growing number of other sources coming on. So AD is growing in that scenario, but we've also seen, whilst the total imports have changed, the mix has changed. So Nippon have increased on the government statistics 50% of what they're bringing by ship. So we're in a very dynamic scenario right now. So it's very hard to be, oh, this is going to absolutely happen. My personal feeling is it's extremely vulnerable. We saw last year there was a little bit of tightness in the European market during the summer, not massive disruption. But if that happens against the backdrop of other things, I think we will see ammonia extended shutdowns if these prices stay high. And we know what happens when that occurs.
The regional picture that you're painting here just draws me to our last episode of the 1895 podcast, where I spoke to Chris Hurren just last week, who is the former Secretary of State in the UK for Energy and Climate Change and is now the chairman for the Anaerobic Digestion and Bioresources Association. And I asked him if he thought that, especially in the UK, we had learnt the lessons from the Russian gas crisis, and he didn't believe that we had learnt them and that we are in fact relearning them now. The rest of Europe and the EU have dealt with it quite well, but particularly in the UK, he thinks that we've dropped the ball a bit, maybe.
I think you've got different market situations. So at the European level, in the Russian crisis, twofold, one of which they still had pipeline gas coming in from Russia, but secondly, they had a bigger dependence, so that storage levels were down, but because they didn't manage them. This year, storage is markedly down compared to last year for two reasons. One of which it started lower, and secondly, because actually we've just used more. So we're in a state now where the levels are markedly down, which gives a challenge to rebuild them, which only rebuilds from LNG. On a UK basis, the dynamic is very much about export-import in terms of where it goes on natural gas, and the UK's got very little storage. So it's in a much more dynamic scenario than the European market, and again has been tended to make up with LNG imports. So the UK is more vulnerable than the wider European market. That's very true.
And this seems like a good point. We're talking anaerobic digestion, of course, and biogas. So let's open this up into some of those talking points. Does all of this situation throw a spotlight on the fact that we need that sourcing change? We need those pathways to emerge stronger. David, first briefly to you, and then, of course, we'll come to future biogas.
So definitely. I think what we've seen, and future biogas will be one of those plants that have opened in the last just over 12 months ago in terms of where it opened. But actually what we're seeing is there's probably about half of what we import we're also producing from AD now. So we've got a significant contribution into the UK market from AD. We're seeing rising sources elsewhere, but it's still, from an energy point of view, it's still only 1% of the gas input. But from a CO2 point of view, it's a much bigger percentage of the market contribution now.
Yeah, and our perspective on that is absolutely yes, there's a need for new sources of methane, but equally there's a need for people to reconsider how much they're using and industries to do the same. From our point of view, we're both a producer of methane, but we are also indirect consumers in that our feedstock that we use to produce our biomethane is fueled by fertilizer, which in turn uses biomethane. And so when the Russian war kicked off, we had a very large surge in the prices of fertilizer, and suddenly all of our farmers wanted to use less, which was a massive experiment into sustainable agriculture in a very unexpected way. We had farmers all across the country using far less nitrogen than they ever had done before, and that has, from a life cycle perspective, been a very interesting source of data for us to look at. Actually, can we do things differently with our feedstock production process? Can we lower the CI of our product? So yes, definitely something that we need more of, more renewable, low-cost biomethane, but also we need to look at using less in the first place.
So a bit of a catch-22 there, I suppose. So the million-dollar question, I guess, what's the solution to bridging all of these various gaps at once?
So when we look at how to expand our operations, we see an industry which is already doing really, really well at processing wastes. And there's definitely new opportunities there, but something that we're very, very conscious of in future biogas is that there is a huge amount of feedstock potential available from integrating fuel crops into food rotations. And that's exactly what we've done at Gonna Be More. There's a lot of advantages for that for the farmers. ecological advantages, agronomic advantages, financial advantages. They're able to sell their products not into the global market. They're able to go to a local buyer who will pay them consistently throughout the years, long-term offtake contracts. So yes, these are all good things that we can do.
What do you want to see from our industry, from the CO2 industry? I mean, we ran a poll here 12 months ago, and our audience, 86% of the audience, I believe it was, said they felt biogenic CO2 was the future sourcing pathway of choice. What do you want to see from our industry? You're here for the first time at this event.
I am absolutely desperate to see this market go from one which is so focused on supply to one that's more looking about the quality of CO2. And by quality, I mean sustainability. What is the carbon intensity of its production? How reliably has that been calculated? What are the co-benefits to the way it was produced? These are all really relevant questions when you talk to people who want to buy carbon dioxide removal certificates. And when I look at the future of the CO2 market, I see this massive demand coming from CO2 sequestration, which is in the order of megatons a year, which completely dwarfs the utilization market. And all of the CO2 that's going there is going to need extremely stringent carbon accounting.
That can be a sore subject at this event, yeah.
David, as an extension to what we just asked David, it's your first event here, of course. David, you've been to our CO2 Summit a number of times. So how has this conversation evolved over the last few years, and how is it going to continue to evolve when we return in another 12 months' time?
I think there's two things, one of which is biogenic was kind of been driven because of it being a desirable thing, and it's very much changed. You know, the first event I came to, it was very much as an add-on, and everyone was still talking about security of supply. We've almost come full circle, but now we talk about security of supply, but biogenic is part of that conversation. I think what's interesting, I mean, just to take on the point David does and the business they do, I think it's slightly undersell. They've done a huge amount of work on the way their product is taken and how it ties into an agricultural cycle. So it's enormously integrated into actually good agricultural practice. And the work that they do with as a business to actually look at that, and the rotations work they've done is very much a template for how this sort of stuff can be done. But I think the other side is, you know, we talk about biogenic and there's no absolute definition of biogenic. The work that's happened in the last 2 years is there's ongoing process with ERGA, who do a lot of the certification verification. There is definitions coming in terms of biogenic CO2. At an EU level, there is an acceptance that there should be a biogenic CO2 definition, that it will tie into some other things. That will probably mirror into some of the RED 2, RED 3 and one or two other things. So what the intention is that it won't put another layer of having to prove these things. It will use existing justifications and measurement systems to actually validate that. So there's a lot of realigning to actually get into those definitions. From a UK perspective, where the UK sits out of that, there's some recognitions of the way that's worked. So, but you know, we've gone from, when I sat here last year, we weren't even really at the point of being certain that there would be an acceptance of that. And so we're on a traction basis where I think we will see defined biogenic CO2, we will see an understanding, we'll see proper measures of that. You know, the concept of talking about carbon intensity of carbon dioxide was something people would have struggled to get there, but it's definitely, again, part of the conversation. The major buyers who are in that B2C space see it really kind of as a vital aspect of that. David can talk more about sort of what the corporate partners are thinking about in terms of where that sits. So there's a lot of actually the value chain becomes more and more important, both for the biomethane and for the CO2. So the whole process is critical.
So really quite a defining year or two for the industry.
Yeah, it has been. And I think particularly for me, who has the joy of focusing purely on sustainability and the science behind our product. When people look at future biogas and other AD companies, they most likely see a company which is selling energy and also selling a carbon product. But when I look at it, I see an industry which is selling sustainability. And so I absolutely see that the importance of having a robust supply chain as being critical to CO2 supply. But equally, when we're looking to get into sequestration markets, when we're looking to even use our CO2 to go into the production of sustainable aviation fuel, increasingly, I'm almost tempted to go out and talk about our product as being one that is focused on emissions abatement rather than as a supply of energy or as a supply of a useful material.
And if we look at this, I'll come back to you, David. In terms of the current CO2 narratives and conversations, it does feel like they're twisting and contorting a little bit. Is there a risk that recency bias in terms of supply security has meant that we've focused on sustainability and circularity a lot of late? And is that conversation going to move back towards security of supply?
I think, to be fair, it sits a little bit alongside where some of the renewables sit in terms of, you've got a shifting political patterns and different parties in there, and depending who you're talking to in terms of what some people are kind of go, well, we don't need to spend on renewables. The reality is I think the conversations have brought back that renewables are part of the critical security of supply, and they're security of supply for energy, but they're also security of supply for CO2. So I think the two sit. I think there's been a reframing for sure, but that doesn't diminish the need to kind of drive that sustainability narrative in terms of where, and we're seeing all sorts of other things. I mean, we've got the BCGA conference coming up in May, and there'll be a presentation from the Vegetarian Society, and we're seeing people talk about vegan and vegetarian-based CO2. So what people are looking at from CO2 and seeing it going into those food chains and supply chains and that B2C space is very critical. David can talk about AstraZeneca and how they view things, because they've made an early commitment in terms of decarbonisation. That's really what drove the Economy project forward.
Yeah, it absolutely was. They have been on our shoulder continuously, looking at our entire process. They really have wanted to understand every little bit of it, just as they were understanding every little bit about their own energy use and driving that down so that they could then buy our gas at a premium without having a huge additional expense. And so their focus has been on every aspect of our LCA, but also on co-benefits of our process. So this is things like biodiversity. What are our farmers doing? Do we have sufficient numbers of wildflower margins on our sites? Do we have a biodiversity improvement plan? Things that we would never have looked at if we weren't working directly with a corporate off-taker. But when we do that, when we have this bilateral arrangement, suddenly we see all of these priorities come out, which were never present to us before when we were working for subsidy schemes purely. So it's been really interesting to work with them as we progress through the lifespan of Gonna Be More.
And increasing overlaps as well that we're seeing throughout the various industries. Maybe of benefit for those here in the room today, we're on day zero, if we can call it, of the event. We've got plenty of fantastic conversations and presentations coming up over the next couple of days. So, David, you've done this before, but what are you looking forward to over the next couple of days? Is it getting back in the room with all of these people? Is it listening to those presentations? Or I hope you say all of the above.
Give us three things.
For me, there is the presentations themselves. Actually, they're very well worked sessions, and I think what it's shown, and what by coming to Rotterdam was to, if you like, open the eyes a bit more than just focus on CO2 into industrial gas markets, was to start to look at offshore storage, to look at, and basically, Netherlands is far ahead of the UK in terms of having that. But we've got people looking at it from a UK basis. We'll be attending this time. So there's a lot more of those conversations and a much broader piece. I think it's a touch paper to understand what the mood and what the sentiment is in a European basis. And the timing is perfect, because we know that offtake demand in the European market is very seasonal. We know that particularly the Netherlands, where we're sitting, has got a massive seasonality around the greenhouses and the usage, but there's a wider, whilst there is general seasonality, it's particularly exacerbated here. So it's the time to understand, because as demand starts to ramp up, where are we sitting in terms of the supply base? Because not always the case, but quite often the case is we get that crosspot where shutdowns happen in the summer and demand takes off, and that's when the industry finds its crisis point. So you get a real litmus test talking around the room, meeting with people, understanding what's happening in the sector. And there's certainly people I've got talked to who are going to come this year because they can get exactly that. They can get a feel, they can understand the impact on their businesses, whether they be a supplier or tied to an off-take side. And again, you've got all of those people in the room. You've got people who can produce and also people who have got the demand side.
And David, with your first experience here, hopefully you're looking forward to those same things.
Yeah, very much so. The presentations will be great, and I'm really keen to meet other people who are involved in the CO2 market. You've already heard me have one big ask, and I've got another. I'd really like to see someone come along and make a certification for CO2. So to work almost like how renewable gas guarantee of origin certificates trade. If something like that could be made for CO2, it would be incredible. I know there's a lot of people talking about it, and I'm sure there's lots of people at this event who are interested in that as well. So we're really keen to find out what people's perspectives are on things like that.
And you're always prolific in the Q&A, David. What will be your one big ask?
I think really it's to start to understand where are we on trends. It's very hard to tell. Basically, as you said, we've talked about the short-term impacts and what it's going to mean for this year. So it's kind of trying to pick. I've got probably two questions. One of which is that short-term piece, and the second term is those longer-term mega trends and what we're doing in terms of certification. It's picking those two pieces up because they're both important, they're both critical, but they're very different timescales.
And I'm delighted to say we'll be covering all of those topics over the next 2 days.
We certainly will, and we also have another live episode of the 1895 podcast. We'll be recording that on stage tomorrow, so we won't be back here in the booth. We'll be over on the main stage, just over there, talking all things finance.
Finance, investment and pricing. Yes, any questions there, David? Anything you want us to throw in?
I'm particularly keen. I chaired a finance session last week in London on sort of biomethane. I'm really interested to understand what's critical for investment committees. What's the things that they need to see? Where are they in terms of returns? But what's the critical things that will tip an investment over the edge to make it practical? Because actually, to be realistic, where we're sitting in terms of an AD plant right now is, if you look in the UK perspective, the kind of price you would get selling to a gas company will give you thereabouts a return on your CO2 upgrader, but it's not contributing to your overall investment in an AD plant, etc. And they kind of come together. So it's not accretive to the major investment. So it's very much a goodwill add-on, and it's held there because it could be helping your CI scores on carbon intensity scores on terms of your biomethane. There are some other things which may bring it into play, but it's a very complicated bit. It's not a no-brainer right now, and it's a question of getting that sense of how could we move things so basically every AD plant puts CO2 capture on the back of it.
And future Biogas will be on that panel, so we've got a sighter of what's coming.
Yeah, definitely.
Well, the exhibition booths are starting to fill up here, so perhaps we should start to join them in a minute, but we'll leave the final thoughts with both of you guys. If you had one final takeaway for this session or one final takeaway ahead of this event over the next few days, what would be your final takeaway, your message to the audience today?
The message, I think it would be really good to try and capture the potential for innovation in the CO2 space, both from buyers of CO2, sellers of CO2, but also from a policy perspective. It's something of a bit of a blind spot for myself. I'm keen to find out what people think is going to be the most important thing to go on from a policy standpoint. And if it doesn't happen, is the industry in a place to drive it in its absence?
David?
And mine is be curious, ask questions. There's a fantastic amount of knowledge in this room. We've just talked about how we're in that risk balance, etc. So start asking questions, really try to understand where we are and what might tip things one way or the other.
And with those beers in front of us, it seems appropriate to say cheers to that.
Certainly does. Cheers to that. We'll continue this conversation over the next few days. But David, thank you for joining us on the 1895 podcast.
Thank you.
Cheers.